Hi everyone, welcome back to our channel. Today, we're going to explore how to report foreign currency transactions in the functional currency, according to IAS 21, the effects of changes in foreign exchange rates. This is an essential aspect of accurate financial reporting for entities dealing with multiple currencies. Let's get started. A foreign currency transaction is any transaction that is denominated or requires settlement in a foreign currency. This includes various types of transactions an entity might engage in. Let's look at some common examples. First, an entity might buy or sell goods or services whose price is denominated in a foreign currency. For example, if a company in South Africa purchases raw materials from a supplier in the USA and the invoice is in US dollars, this is a foreign currency transaction. Second, borrowing or lending funds when the amounts payable or receivable are denominated in a foreign currency. For instance, if a UK company takes out a loan in euros, this transaction is also considered in a foreign currency. Third, acquiring or disposing of assets, or incurring or settling liabilities denominated in a foreign currency. For example, buying a piece of equipment from a German supplier and paying in euros. When a foreign currency transaction occurs, it must be recorded in the entity's functional currency at the initial recognition. This is done by applying the spot exchange rate between the functional currency and the foreign currency at the date of the transaction. For instance, if a Canadian company buys equipment for $10,000 on June 1st, and the exchange rate on that date is $1 equals 1 Canadian dollar and 30 cents, the transaction is recorded as 13,000 Canadian dollars in the company's books. The date of a transaction is the date on which the transaction first qualifies for recognition according to IFRS. For practical reasons, a rate that approximates the actual rate at the date of the transaction is often used. An average rate for a week or a month might be used for all transactions in each foreign currency occurring during that period. For example, if a company has numerous transactions in a month, it might use the average exchange rate for the month to simplify the recording process. However, if exchange rates fluctuate significantly, using an average rate might not be appropriate. Significant fluctuations can lead to inaccurate financial reporting, so it's important to use the actual spot exchange rate at the date of each transaction in such cases. For instance, if the exchange rate varies drastically within a month, recording transactions at an average rate could misrepresent the true financial position of the entity. To summarize, foreign currency transactions must be recorded in the functional currency at the spot exchange rate on the date of the transaction. This ensures that the financial statements accurately reflect the economic impact of these transactions. Remember, using an average exchange rate is acceptable only if exchange rates are relatively stable. In cases of significant fluctuations, the actual spot rate should be used to ensure accurate reporting. That's it for today's explainer on reporting foreign currency transactions in the functional currency under IAS 21. We hope this has clarified the process for you. If you have any questions or need further examples, leave a comment below. Don't forget to like, subscribe, and hit the bell icon for more financial insights. See you next time.